I'll send out a link to register for that as well after in the post-webinar email. So one last housekeeping item here. During Chris's presentation, if you have questions, I will sort of act as the moderator. You can ask questions using the chat box on your GoToMeeting panel there. You can either address it to the entire audience, which is great. I think that's a good way to let other folks know what people are thinking. But if you're a little more shy, don't want to share your question with everyone, you can either address it using that chat box just to the meeting organizer, and that'll go straight to me. Or you can shoot me an email, just respond to the email I sent you with the link to this webinar this morning. And I will either interrupt Chris pretty quickly if you're just looking for some clarification. If you have a broader question, I'll probably hold that until an appropriate time. So that all being said, Chris, I'm going to bring you off mute here, if I can find your name in the list, and I will make you the presenter, so keep an eye out for that. And yeah, you should, we'll just wait for that transition to happen, and then Chris, you can take it away. So you'll want to hit show your screen there.
There we go.
Looks like it's loading here. Perfect. All right.
Okay.
There you go.
Yeah, we got it?
Yep, it's all working.
Great. Thank you very much, Ben. It's a pleasure to talk to the group. And as Ben said, he will be taking questions. I will leave it up to him whether he wants to interrupt the proceedings with a question or do things at the end. It's fine with me no matter how that goes. I am Chris McGill, the Vice President of Energy Analysis and Standards at AGA. Most of you, I think, know who AGA is. We represent, from an advocacy position, local gas utilities here in the United States. We have over 200 members, and in fact, every investor-held natural gas utility in the United States is a member of AGA. So much of the work that we do analytically does look at the whole country, and I am going to speak to our winter heating season outlook for 2015-2016, but where I can try to drill down a little bit into a couple of these statistics and metrics as they apply to the West and to the Northwest. So we'll get started. I have about 20 slides I'd like to go through very efficiently, I hope. And I'll get started right now. Let's stand back from this a little bit too and understand that when we're talking about the natural gas market in the United States and North America in general, we're talking about a very large spaceship here, and it has a lot of buttons. So we're going to push a few of them and just try to look at some of the metrics that we see for this winter heating season and how that may impact consumers and customers during the coming winter heating season. One of the critical things, of course, that has happened here in the United States revolves around domestic natural gas production. A decade ago, we were producing less than 50 billion cubic feet per day. Today, the country produces 72 billion cubic feet per day, a significant increase. Excuse me. Looking really at just 2015 over 2014, we have finally seen domestic natural gas production flatten out a little bit. This is a rational response to the marketplace. In the Northeast and Midwest, 2015 over 2014, actually natural gas production has increased. In the Northwest and Rocky Mountain area, it's been about somewhere around flat during 2015 compared to 2014. And in the Texas and Mid-Continent, natural gas production has actually been down. What we have today at 72 billion cubic feet per day as a per day average year to date in 2015, that's about 3.5 billion cubic feet per day higher than the year to date average in 2014 over this same period. So even though production in the U.S. has flattened out, it is significantly higher than it was last year overall. Not surprisingly, prices have reacted to the marketplace this year. We've seen growth in natural gas demand, but relatively flat natural gas prices, generally associated, of course, with the natural gas market that is viewed to be oversupplied. What we've seen more recently, even since we did our winter heating season outlook in early October of 2015, is that prices have come down even a little bit more. Average cost of natural gas in 2014 was north of $4. Of course, it's south of $3 this year. In fact, if you look at most of the acquisition hubs in the West right now, natural gas is trading closer to $2. And looking at the Henry Hub, during this first half of November, we've had periods of time where gas was trading, at least cash gas supply on a daily basis, was trading at less than $2 per million MBTU. So we are very much in a low price environment right now, and generally what that means for consumers is that we see great value for consumers going forward during the winter heating season. Storage is part, of course, of that supply picture, along with natural gas from Canada. Speaking to Canada just briefly, again, looking at 2015 compared to 2014, imports from Canada for the West and Northwest specifically are up in 2015 over the comparable period in 2014 by almost 20%. Nationally, the storage picture is similarly very strong. For the Western United States, or the consuming region West, as outlined by EIA, the last reported volume there was 535 billion cubic feet last week. We're still waiting for this week's report to be released tomorrow, but that number is fairly close to what we've seen as the high point for storage here nationally, as well as in the Western United States. That high point for the West being in 2012 and 2013, where in early November, storage inventories for working gas exceeded 550 billion cubic feet. So we may very well get there here over the next couple of reporting periods as data comes out and before the winter heating season really pushes and catches on. So we're in a very, very strong storage position, along with the production position that we see around the country. Most of you, again, are aware that much of this story is tied to what we have seen in unconventional gas development throughout the United States, particularly in the Marcellus, Haynesville, Eagle Ford, Fayetteville shales, to some extent shale production in the Rocky Mountains also. Part of what has begun to flatten out in the production profile can be attributed to shale. The Energy Information Administration, in their recent drilling productivity report, notes that they expect shale production, which is around 45 billion cubic feet per day during November, to drop to 44 billion cubic feet per day in December, about a 1% drop. Those drops are expected to continue into 2016 as we begin to see some net balancing in the marketplace, tying together all of this supply with what is being demanded. Looking forward a little bit more, 2014 through 2020, this is a slide from Bloomberg Energy Services. I saw this slide for the first time during the fall, or earlier this fall, and it was written in Japanese. I didn't need to be able to read Japanese to get a sense of what it was speaking to. And Of course, what we have seen and what we expect to see in the near term is incremental growth in production in the Appalachian Basin, other basins around the country also, and we can talk about it, any of these you want to perhaps in your questions, but significant incremental growth still to come from the east. That is having an impact on the pipeline infrastructure in the United States, particularly in the east Midwest and going back towards the producing area in the Gulf of Mexico. Production from Pennsylvania, West Virginia is pushing back on the traditional flow of gas, and we've even seen Rocky Mountain Express, the pipeline system, being turned around with physical flows of gas going from east to west back towards the Chicago market. So extraordinary things have happened with respect to the supply picture around the country. In addition, demand is expected to grow. Again, this comes from Bloomberg Energy Finance. It isn't that dissimilar to many other growth analyses that I've seen for the next 5 years or so. There is an expectation for LNG exports to develop in the Gulf of Mexico, as well as some industrial development of natural gas demand around the country also. Mexico is expected to be a growth area, particularly the northern border area for natural gas. And whereas we are currently providing about 2.5 to 3 billion cubic feet of pipeline exports to Mexico, most analysts believe that that is going to grow. So how does this really translate to an outlook for winter? Well, when Ben asked me to do this presentation, we had done an outlook for the winter heating season in early October, and that's essentially what I'm going to look at right now. As noted previously, looking at gas supply going into this winter, production is strong. Inventories of storage are strong. They will be nationally at record levels as we enter the winter heating season this year, and in fact may even exceed 4 trillion cubic feet of working gas, something that's never happened before. The question becomes, is there going to be demand in the country that challenges these gas supply elements regionally and nationally? Excuse me. That storage position, as I said before, very strong. We were looking at 3,929 billion cubic feet of gas entering this winter heating season for the October 30 report from EIA. Their expectation, and what I've read so far this week for tomorrow, is a net injection in the high 40s, near 50 billion cubic feet for the week. And from the daily numbers that I've seen from Bentech Energy and other sources, the injection patterns around the country are still positive. They're not double-digit injections on a daily basis, but they are still positive. So we haven't seen that first strong withdrawal of gas. If you add those numbers together, we'll get very, very close to that 4 TCF number as we get a few weeks into November. In the EIA forecast, which we use as a basis for looking forward for the winter heating season, as we did this in late September and early October, EIA saw positive changes, that is slightly more demand for natural gas to power generation during the coming winter heating season. I see that as really what is an institutional change in gas to power gen, particularly here in the eastern United States, where there's just simply more gas going to power generation during the winter. We saw that during the polar vortex 2 years ago, and we even saw it last year. In EIA's outlook, they also have growth in the industrial sector for gas demand over this coming winter heating season. Now, the real seasonal low that is influenced, of course, by the winter heating season and by individual small volume customer use, remains to be seen what that will be. Virtually everyone is expecting that to be lower in 2015-16 over the previous winter heating season. The reason for that particularly goes back to what we see in the overall weather conditions expected for this winter heating season. A strong El Nino event. Generally, that means above average temperatures in the northern tier of the country, lower temperatures, perhaps slightly below normal temperatures in the southern tier. And in fact, when you look at it even a little closer, other reports show something similar. But along with the higher temperatures in the northern tier comes the real possibility of less precipitation than normal. And with the slightly lower temperatures in the southern tier, perhaps more chance for precipitation than normal. Those outlooks are very similar to virtually all of the outlooks that I've seen so far going into this winter. For EIA and for the numbers that we looked at in October, they were looking at a winter heating season on the basis of heating degree days. Nationally, at least 2% warmer than normal. Other forecasts actually were warmer, and in fact, EIA today has released recently their adjustment to their winter heating season outlook, and they do see warmer conditions based on what is developing. Prices are down, as you well know. As we look at gas going into storage during the winter heating season, we saw gas this injection season about 35% less than it was the prior year in 2014. To customers and to overall costs, that generally matters. On a national average basis for the 5-month winter heating season, November through March, generally 15 to 20% of all gas supply comes from storage. So those costs do matter. We also survey our membership and ask them prior to the winter heating season what their expectations are for winter heating season bills. This year, when that question was asked back in September, our members said that in general, more than 80% did not expect an increase in normalized bills this year. 17% had said they did. But in general, we put that together to find a reduction in throughput based on what their responses were and based on what the anticipated winter would be of nearly 3%, and an expectation of declines in bills of about 6%. Now, when EIA published their information in October, they saw a year-over-year decline in winter heating season bills of about 9%. We were estimating 5 to 7% based on both sets of data. But today, excuse me, as I said recently, the Energy Information Administration has published additional information. I lost my screen here. Hang on a second. Regarding the coming winter heating season, warmer than expected, less consumption, and an overall bill profile that they see as much as 13% on a national average basis lower this year for residential consumers specifically compared to 2014-2015. That is pointing to a very, very good value for consumers as we look at the coming winter heating season. Now, for us here at AGA, not only on the basis of consumer value, those numbers and that type of expectation is very important. We are here in Washington talking about a number of issues around the total energy economy, natural gas's role in the coming lower carbon economy, and where gas fits as a low carbon fuel. Certainly, we see on a full fuel cycle basis great advantages in the direct use of natural gas, and we're going to continue to be pushing those ideas and concepts along with what we clearly view as the facts associated with it to policymakers. Let's remember, in 1970, there were 38 million residential customers, residential meters, more people behind the meters, of course, in the United States, 38 million in 1970. And here we are about 45 years later in 2015, and there are 68 million or 66 million small volume customers in the United States. Those two groups of consumers, the 38 million in 1970 and the 66 million in 2015, 2014, based on the statistics, consume the same aggregate volume of gas. The natural gas industry, particularly small volume users, have been a poster child for efficiency in this country. And that message doesn't often get out there, but it is an extraordinary message. The residential consumer today essentially uses, on a unit basis or a user basis, half of what they did in 1970. That's an extraordinary positive advocacy message. That translates to reductions in greenhouse gases, and the country is discussing the Clean Power Plan. Climate change is a significant issue. Gas-fired furnaces are an extraordinary opportunity for the country to continue to reduce its emissions profile, along with many other factors, including renewables, including higher mileage requirements in vehicles, all of those things. But certainly natural gas is part of that story also. Natural gas uses less energy and has lower greenhouse gas emissions overall in the full fuel cycle study of these issues. Compared to virtually all of the other source fuels for home heating. And again, that is the story that we are trying to tell. So as we look forward to this coming winter heating season, what we see is great value for consumers. We see an extraordinary opportunity for the country to utilize a domestic resource, and we see the opportunity for the country to continue to build on its legacy of greenhouse gas reductions, CO2 reductions, based on the use of this plentiful, abundant domestic fuel. Those, those are my quick remarks. Be happy to answer your questions or turn it over to Ben and let him direct those questions to me.
All right. Well, thanks, Chris. Any questions for Chris? You can submit them in that chat box below or shoot me an email. I haven't got any so far. So if not, we'll get out of here early, but I'm sure there's some there. All right, here's a question. Does AGA produce regional electric values?
No, we do not.
A softball to start us off. Any other questions out there for Chris? If not, oh, here we go. Quite a few. Perfect. Here's one for you, Chris. What is your price outlook for the end of winter?
Well, I'm sorry to be a stick in the mud here, but we don't do price outlooks. We're not allowed to for antitrust reasons. However, again, we can observe what we see. If you look at the NYMEX right now and look forward, not only just for the coming winter and the following year, you look forward several years, there's nothing on the board right now above $3 per million BTUs. What we see is a relatively stable market until that market is balanced by additional demand, some additional reduction in natural gas production, which has been going crazy over the last couple of years, and we're going to quite possibly then see natural gas prices push up a little bit. But for right now, we see relative stability and expectations that aren't that dissimilar to what I see for the current forecast at Henry Hub is what I'm talking about here for the December contracts.
All right, thanks, Chris. Actually, we've got a few questions flowing in here, so keep them coming, folks. So, Chris, what were the units of measurement on the demand map where you showed incremental demand growth year over year? That's one question we had.
Okay, let me go back and look here. So, are we talking about this slide here?
I'm guessing that's the one.
Yes, and that's billion cubic feet per day.
Okay. All right. Okay, let me look through here. Is the large, I think this actually ties into this this slide as well. Is the large growth in forecast demand in Texas due to forecast LNG exports? I'm guessing they're on the Gulf Coast, but
right, it would be Texas, Louisiana, and yes, some portion of what they're showing there is 10 plus BCF per day is attributable to LNG exports, and in Bloomberg's outlook for LNG exports for 2020, at the time this was done, they placed that at about 6 BCF per day, so it would have been 60% of that number.
Okay. While we're on the topic of LNG, actually, here's another question. How much LNG export capacity has been approved, and how many years until online? Do you know that off the top of your head, Chris?
Oh boy, approved. I'd have to go look at it off the top of my head. I don't recall. What we have right now is a number of projects contemporaneously in different places in their construction. The first LNG to be exported will come from Sabine Pass in Louisiana. That's a Cheniere project. That will be the first 2 trains of that project exporting natural gas. Each of those allow for about 700 million a day in liquefaction capacity. So you're talking about somewhere around 1.3, 1.4 BCF per day to start with the Sabine Pass project. Their 3rd and 4th trains are already under construction, and they actually have a proposal for the 5th train also. We also have construction projects going at in the Mid-Atlantic area, of course, with Dominion. The Cove Point facility, about a BCF per day of capacity, is a little more. It's right around 50% complete on its continuum for getting to its expectation for exports. You have other facilities, the Cameron facility, the Corpus Christi facility in Texas, about 22% along its way. Each of these brings relatively small increments of LNG to the table for export. The current construction that we see today and the expectation for that over the next 2, 3, 4 years is that it would certainly be possible to export 6 BCF per day by 2020, and more after that if the projects continue to find buyers for the gas. Based on what's been approved, the numbers are larger than that. But the absolute financial decisions on go and no go with these projects continues to be dependent not only on FERC jurisdictional issues, but local issues associated with whether these projects are going to be tenable for state governments and for local governments. So there's still hurdles to get over. Again, we're talking about a marketplace currently that's producing over 70 billion cubic feet per day, and it's expected to grow if the demand is there, and an increment of LNG production that is really only on the margin, certainly as it gets started. And even as we move towards 2020, still just a fraction of what that production capability is here in the United States.
Great. Thanks, Chris. While we're on the topic of infrastructure and demand here, do you know what the time frame is for completing the reversal of REX, the Rockies Express pipeline? Have you heard anything about that?
Well, I'd have to go through my slides to get the absolute timeline. It's actually the first segment of that is already happening. There is, of course, more work to be done. There's more capacity out of Pennsylvania, out of West Virginia that has been proposed and is being worked on. An absolute date on the final completion on the REX reversal, I don't have that in my head.
Got it. Thanks, Chris. Here's one that I think I have an answer to, but I'd like to see if you have perhaps a different opinion than we do, Chris. What's the biggest natural gas challenge for the Northwest in the foreseeable future? Storage availability, growing demand, pipe capacity, or something else?
Well, can I let you answer that first?
Sure. I think from our perspective, and good question to Sarah, thanks for sending that in. I think from our perspective, we're really keeping an eye on timing of natural gas or of pipeline development. So there's a bunch of projects out there right now that are kind of speculative is perhaps a bit too strong of a term because there's a lot of work being done behind the scenes, but there's LNG export efforts going on, of course, and there's a number of large methanol projects and some other smaller industrial demand. So the big question we're watching is how's that all going to line up in terms of pipeline system expansions. We know that it takes perhaps a little longer to build a pipeline now than it did even 5 or 10 years ago. So we're watching that, and also the way pipelines are built, right? You don't do them incrementally; you do them in large tranches. So what's going to happen when one of these projects gets approval or decides to go ahead? Is that going to spur the other ones to go along, or what happens also if none of them go ahead? So that's something we're keeping an eye on, and I think maybe it's not the biggest natural gas challenge out there, but certainly a big question mark in the Northwest.
I would add to that really that is really typical of every region of the country. When you look at the Northeast United States and you look at this Appalachian development, you're looking at pipeline projects designed to serve the Mid-Atlantic area, pipeline projects designed to push gas and liquids towards the Gulf Coast, pipeline projects designed to serve Midwestern markets, Pennsylvania pipeline projects headed towards Michigan. And of course, the expansions, if not a brand new, 36 or 42-inch line going to New England, expansion and other things that have been happening in New England over the last several years that have started to relieve some of the pressures there. So that pipeline infrastructure development is very crucial, and it's the challenges that go with that actually, in my view, go all the way upstream to producers. Part of the value in creating these pipeline projects is the great value that natural gas is for consumers and the demand that goes with that. as an analyst, you can make an argument right now that the amount of money in the value chain, particularly associated with production, is simply not sufficient. It's the prices that we see are low. That tends to have an influence on midstream projects that are being built when you have uncertainties in the development of natural gas production. That uncertainty then kind of funnels its way down towards some of these pipeline projects that you're referring to, and whether this is the environment, this is the time for those things to be built. So there are challenges throughout the value chain, really, from wellhead to burner tip, and I would agree with you, Ben, that the infrastructure challenge is a very significant one.
Great. Thanks, Chris. Just a heads up for the folks on the webinar, too. The Northwest Gas Association, we pulled together a short primer on what some of those challenges look like. So I'm happy to share that in that wrap-up email as well, if any of you folks want to have a look at that. Let's see here. I want to make sure I got a couple. This is actually more questions than we've ever had. So thanks, folks. I'm just going through here to make sure I don't miss any. So here's one for you, Chris. Do you see natural gas use for transportation growing significantly?
Again, as an analyst, I stand back and look at it, and where it appears to have some traction for growth right now is in the area of long line trucking and in fleet vehicles, trash trucks, things like that. Even though there are challenges there, the pricing differentials between diesel fuel and LNG or CNG have been reduced significantly. And so there's probably a little less momentum around that. We certainly have seen growth in natural gas vehicles in those terms. For the personal vehicle, for the passenger vehicle, certainly there are some states that have made significant commitments to that, like Utah, for example, in terms of developing infrastructure. We're still waiting for that home refueling unit that makes sense for the individual consumer. That's a harder nut to crack right now. So the market does matter, and some of the momentum around NGVs, natural gas vehicles, has been reduced. I would just make that observation as an analyst. And of course, there are other options, particularly in the personal vehicle market when you start talking about electric vehicles and others. So it's still a market that has significant challenges in front of it, also in terms of growing. Now, gas is still a great value. It's a great value around the idea of lower emissions and all of those things, but it is a great challenge.
Thanks, Chris. While we're talking about emissions here, we had a question from someone. The CO2 numbers associated with electricity seemed high, according to this question. What was the basis for those values? I'm guessing those are national numbers, right? So it could be a lot more coal in there than we get up here in the Northwest.
These numbers here, is that what we're talking about? CO2 comparison of home energy use?
I'm guessing that's probably it, unless...
Yeah, there is a national balance mix that we use that comes from the Midwest United States, and so it does have significant coal in it in terms of what those metrics are and how they compare.
Okay. Thanks, Chris.
Of course, every region of the country is a little bit different in terms of its power generation mix. Fair observation.
All right. So, any last minute questions here? We had someone that wanted to share some information, but I don't know if I'm going to be able to make it work on here. But if any of you do have any follow-up info that you'd like to share with the attendees, I'm more than happy to send it out in a follow-up email as well. Of course, there's some interesting stuff here. So any last-minute questions? We'll do a last call here. And seeing nothing, giving you all time to type, we will call this a day. And thanks for all of your attendance. Keep an eye out for that wrap-up email. It'll go out pretty quick. I'll have a recording of this and a PDF version of Chris's PowerPoint from today for you all to review, and then also the items I mentioned at the beginning. So thanks again. Thanks to you, Chris, for joining us. And
yes, sir.
And also just a plug for on December 10th, we've got our next one coming up with Grant Forsyth of Avista. So thanks, everyone. Have a good day, and have a good Thanksgiving for those of you that are calling in from the U.S. So thanks all.
Thank you very much.
Thanks, Chris. Bye.